Alrighty, I think we are up and running. Just checking a couple things here, guys. We'll be with you in a moment. How are we doing today? How's everyone's Friday morning or Thursday nights, depending on where you are? Let's just double check we got up and running. G'day, g'day. There we go. That's in the way. We're going to have to move that. Put that there, shall we? There we go. How you going, Flash? Welcome. All right, a couple of things changed. One, the obvious one is our setup. The setup's moved a little bit, right? So I've got an empty wall behind me now, so I can stand right the way back. But also new monitors. So I'm going to have my trading monitor. If I'm looking this way, I'm trading. If I'm looking this way, I'm looking at the OBS. And if I'm looking up, I'm looking at your beautiful faces. Okay, I've got your chats, all logs. They're up there. So if I look up, it means I'm reading your messages. There he is. How you going, Heather? Nice to see you. Warman, how you going? Flash, how you doing? Anyone over on TradingView? You know the drill. Give me a heads up. Give me a thumbs up. Give me something. Just let me know you're there. Let me know you're working. Probably going to be a much quieter stream today, just because the office has been out of office with public holidays and stuff this week, and we didn't send out all the marketing stuff that we usually do. So, hi Rick, how you going? Welcome in. We won't take up too long with the starting welcomes, but we'll jump into some trading charts and into a bit of discussion today. A couple of things I want to have a discussion about, which will be interesting to have a read. How's everyone's week been so far? Just give it a couple minutes for some people to flood in. Anyone over on TradingView, once again, please just give me a thumbs up or something. Hi Stephanie, good to see you. How are you doing? How's trading been this week? It's been a decent week for me trading wise. I always like interest rates time. Interest rates times is always fun to trade. A lot of volatility in the market, especially in the Asian sessions. The Asian sessions are beautiful to trade during these weeks. We've got NFP tonight or tomorrow morning for a lot of you, which is going to be interesting. We're going to have a discussion on that a little bit later to see if anyone has a bias on the NFP data, even though it can just be absolutely mental. So far, so good. I only had one trade this week. Awesome, Rick. What have you been trading? Is a long-term hold or a short-term trade just the one opportunity? Hello, hell of a week. Hi, Carlos. Welcome. Hell of a week, eh? What have you been up to? Get me informed. You've been trading GJ. GJ is a very popular one, isn't it? A lot of people love the volatility in GJ, the sterling and the Japanese yen. I can understand why. It does get a lot of movement for a forex pair. Well, Japanese yen tends to do that in most pairs, to be honest. Like when I'm day trading the Asian session, I like Aussie dollar, Japanese yen, so very similar. But yeah, a lot of people fluctuate to GJ. They do like it's very similar to gold. A lot of people flood to gold as well. They like the volatility in gold. Many traders trade GJ. All right. I think TradingView is just going to be quiet again, to be honest. Low fat video funk. How you going? Good morning. Good morning indeed. Welcome to the live stream. I'm going to just assume TradingView is very quiet again today. It tends to be the case recently. We either have people sitting in there and just kind of watching, or my chat doesn't work. But we're just going to assume that everything is working and everyone in that chat is just watching. It's a liquid pair, that's why. Yeah, exactly. The volatility is quite high, Rick, in GJ, so a lot of people fluctuate to it, which, I mean, can be positive and can be negative depending on your trading style and trading strategy. I think a lot of people flood to fluctuating pairs and volatile pairs, but they're trading it as if it's not a volatile pair, which can hurt a lot of traders. But it is always more profitable, more fun, I guess you could say, trading a volatile pair. I don't know about profitable, depends on how you trade it, but it definitely can be more fun trading the liquid pairs like GJ and well, Japanese yen against anything really, and gold as well. Gold also has that effect. Not too much I want to run through today. A couple things we're going to be doing in the future, which I want to discuss, which is exciting, as well as I want to have a chat about the charts. We will have a chat about US dollar CAD, as it was one of the trader chart of the week trader things in the Discord. We are going to have probably next week, we're going to have a special guest come on to talk about algorithmic trading as well. So that's going to be interesting. So keep an eye on for that. But other than that, we're just going to chat about some charts. We're going to chat about all the inflation, the interest rates decisions, the stuff that have come out this week. And we're just going to have a look around the market, see what opportunities are out there. I day traded the Aussie dollar a lot yesterday. I might even run through my account history there and show you how I traded and why I traded those. This week, especially because of all the inflation and the interest rates, the fundamental side of trading has been really fun and quite good. The volatility in the Asian session, I want to say, has been perfect. Okay, so we've had enough volatility to create a move, to create like a 10, 20 pip move, but not enough volatility to sustain the move. I'm a big fan of fading the market during the Asian session, and that market right there has just been perfect for me. So I've taken many trades on Aussie dollar, US dollar. I tried to look for some in Aussie dollar, Japanese yen, couldn't find any. I want to talk about the Aussie dollar. A lot of people have been reaching out, a bit confused about the Aussie dollar because fundamentally it's so strong. Like, we're getting good jobs data. The interest rates decisions, they're good ones, they're smart ones. The trade balance just came out, is positive. Like, we're getting all this indication that the Aussie dollar should be strong, yet it's getting sunk. And the reason it's actually getting sunk is because of China. And I'm going to talk about the correlation and how that's affecting the Aussie dollar's evaluation as well. So maybe we do have a little bit to talk about. maybe I'm just going to be able to blabber on. But before we jump into the charts and really dig in, anyone have anything they want to say? Hello, Joel. Thank you, Mr. Consistent over there on the trading view. He's always the one to let me know that he's there. How you going, mate? It's good to see you. It's good to see you. I believe it was your question in the Discord. Is that the same Joel? Maybe. I'm going to touch on your question as well, Joel. How many trades did I have this week? Well, I had. Let's have a look, shall we? On my 5%ers account, 1, 2, 3, 4, 5, 6 trades this week. But I think like 4 of them or 5 of them were yesterday. So earlier in the week, didn't do too much. But then yesterday, I really jumped on. Yesterday worked perfectly. I actually recorded a video, but I just didn't end up. It didn't come out the way I wanted to. Yesterday was perfect in. Wow, I've just lost my third monitor. Bear with me, guys. Yesterday was perfect in getting into a position prior to a fundamental news release, which I had a bias of. And that is something I want to show you as well, because I managed to get into a buy position in the profits and go to break even before we even had the fundamental data come out, which I had a bias of, which did play out the way I thought it would. And my take profit spots were spot on, and I want to share that with you guys and share the thought process. I recorded myself trading it live, and it is something I think I want to do in the future, is these live trading rooms. Maybe they go a little bit longer than just an hour and we sit here and we chat, but rather we actually day trade and we trade the market. The only thing is, some days we're just going to be sitting here for half an hour doing nothing, because that's how trading gets. Half an hour of literally no opportunity. We're just going to be sitting here, which isn't going to be overly entertaining. And then I also don't want to completely share the day trading strategy, because if I completely share the strategy, then we're going to see a lot of traders go and use it at the firm, and then the firm, like, we're just going to have a load of accounts kind of trading the same thing, and that defeats the purpose of diversification, which the firm brings in. It's a hedge fund, right? So it's going to be interesting. So there's a couple of barriers I've got to jump over to be able to do that, but I think I'm going to try and bring in some proper live trading in the future. It's just going to be interesting to figure out when, how, and why. But yeah, anyway, back to the thing. I had about five trades. I think it was 5 trades this week. Joel. Okay, I'm going to answer Joel's question. Firstly, he said, "Hey Jordan, do you have a daily/weekly loss limit? If not, do you have any rules for when you're on losing streak to help reduce the damage and regain confidence?" Big question. Good question. This is interesting. Because all of those can be viable methods, right, to reduce drawdown, to reduce exposure to bad trading. Okay. Now, I change position sizes all the time based on confidence, but I change position sizes based on confidence on the actual setup. Okay, so every time I look at a setup, my confidence factor determines my risk factor, how much money I put in. So if I'm getting setups that just aren't that great, I'm already risking less than full risk anyway. So that right there limits a lot of drawdown capabilities that I have. I don't have a max daily loss or a max weekly loss. I don't like confining. I don't trade that often throughout a day. I did yesterday, but usually I don't trade that often to be able to get to a point where in one day or 1 week I'm going to get seriously low. And I understand the confinements of my strategy. So I understand what I can achieve and what it can achieve in terms of drawdown. I can understand how big losses can get and how drastic. I think through back testing, I've had something like 15 or 16 losses on the trot. So I can expect that. I have to expect that. If it's happened before in back testing, it's likely to happen again at some point in the future, if not worse. So while I don't have any like fixed set rules, I do have a thing goes in the back of my head. If I get 9-10 losses on the trot, is it going to be one of these big drawdowns? The difference is, instead of thinking I should size down, I start thinking maybe I should size up. And the reason I do that is because it's like buying the dip of the strategy, right? So the rules you've asked there help beginners, in my opinion. They help people stay disciplined. They help people not blow their accounts, not lose certain amounts per day. If they're not mentally in tune that day, it halts them from going on a big losing streak. Once you've passed that beginner step and you're already profitable, them rules start to become limitations. And it's with a lot of the stuff in trading is a lot of the extra things we brought in to help us get to profitability at the start actually start becoming barriers to achieving greater success later on. And it's tough because a lot of people just get used to and get in the habit of whatever rules they set, and then they're unable to break those, or they're unable to understand why you set those rules in the first place. Okay, why do we have a max daily loss? So we don't lose X amount or more than that in one trading session. Fair enough. How are you going to get to the point where you lose that much in a trading session? Is it because you're reading the chart wrong? Is it because you're trading off emotions? Is it because the chart actually is wrong? Whatever it is, there's going to be some factors of how you manage to get that big of a loss. And as you get further in your trading career, you need to understand what those factors are and then decide what risk you're going to take based off of those factors prior to having that max loss. Okay, so we technically still have that max loss, only we prevent it before it happens, before we hit that. So the beginner's way is, let's say you're a very emotional trader, you trade off fear or you trade off P&L, and you're trading away and it's not working too well, yeah? And you go down, you hit your max loss. Each one of those trades you took that you're probably looking back on going, holy shit, why did I take that trade? Why on earth would I do that to myself? That's not a setup, whatever it is. If you have that max daily stop loss, it makes you ignore those emotions. It makes you be like, oh, it's okay, I've got a safety net. I can still trade. I've got my safety net. And you'll never, it's like learning to ride a bike with training wheels and then never trying to get off those training wheels. When you don't have that safety net and that risk and that exposure is there, it forces you to assess preventing that before it happens. Okay, so before you enter the trade this time, you're stopping and you're going, realistically, is this the right trade? Am I in the right mindset? Am I concentrating? Am I nervous? Do I have FOMO? Whatever it is, and you'll kind of assess that stuff prior. So that's a really elaborate answer for you, Joel, and I'm not sure you probably picked an answer from that because it's tough to try and get the point I'm trying to say across. But yeah, they help max daily losses, max weekly losses, or kind of your max amount of losses before you downsize. They do help. They do help you get to profitability. There's no capping in that. Okay, it will help you get to profitability. It will help you become more disciplined and understand that stuff. But once you've gotten to profitability, now don't take big jumping steps. So for everyone else listening to this, don't think, okay, don't do max daily losses or anything like that, because it's not going to help you in the future. Because it will help you get to the spot you probably want to get. It's just once you're in that spot, it then becomes a barrier to getting to that next level. And that's what we need to do as traders. We need to constantly get to that next level. So it can get you into your B game or your C game, where your C game is profitable, but you're never going to be able to trade your A game with those limitations. It's got to be a matter of understanding. Some people do. I know a lot of traders that do still have the max daily and max weekly loss, and they're great traders and they understand the emotional aspect. I just find with most people who have that safety net, that plan B, they're constantly thinking, it's okay, I have a plan B. And when you have that, you're more reckless in your decision making. You're lazier because you can I've got a fallback plan. It is what it is. And it's like, well, no, that's not what we want to do. That's not what we want to achieve. We want you to, it can get a bit messy. But I think you understand what I'm trying to say there. And I hope that makes sense for people. I just blabbered on there, but yeah, what I'm trying to get at is no, I don't have a max daily loss or a max weekly loss. Yes, I change my position sizing all the time based on confidence and based on how I feel about my trading and how I'm trading at that time. Also, what the chart's telling me, how confident does the setup look? I'll base my position sizing off that. Drawdowns happen. They happen. You've got to factor that in. It's never avoidable, right? So I trade very small position sizes anyway. I'm on one of my 25k accounts, and I risk $20 a trade. Just aiming for that, 1%, 2% every fortnight or whatever it might be, maybe month. I'm happy with. So yeah. I hope that made sense. I'm sorry, it wasn't very structured, but I think the main point I was trying to get across was there. That makes sense. Okay, cool. Thank you. Thanks for the question, though, Joe. I really appreciate it. I had another. You started grading your trades. Fantastic. Grading. Okay. Touching on that, Joel. For everyone on YouTube, Joel's just said he started grading his trades. Okay. Everyone should grade your trades, but here's the thing, Joel, and I'm not sure you'll do it or not. You might. Grade the trade before you trade it. Grade the trade after you trade it. Okay? Because they're two very different things. They're two very, very, very different things. Grade the trade before and grade the trade after. Okay? And then you'll start having a look and you'll be like, I considered this an A+ trade. Looking back on it, this was a C trade. Why on earth? Why was there a big difference? And then you can find the differences in maybe it's emotion. Maybe you really wanted to take that trade, so you forced yourself to believe it was an A+ trade. It can be a range of different things, but I highly recommend grading trades. Fantastic. Absolutely love that you're doing that. Honestly, that is so powerful and so good. But also grade them before you trade it. Yeah. Find the setup before you enter, literally before you click buy. Find the setup, have a look, go, yeah, that is a B trade, or however you grade it. You might trade it numbered wise. Grade it and then trade it. Let the trade finish, then grade it at the end as well, and have a look at the differences. You started doing that with all your back test trades as well. Yeah, fantastic. Yeah, you got to have a look at what you think it is prior and what it ends up being, and what you still think it is at the end. Because you're going to find you have A+ setups, you'll trade it, and it will still be an A plus setup, and you put it in there, and they will be your most proud trades. I spoke a couple of weeks ago. Someone asked me what my best trade was, and I said it was a loss. My best trade ever was a loss because I just traded it perfectly, and I was so proud about the way I traded it perfectly. The just chart didn't give me the answers. So it's the same thing. We've got to grade, we've got to do the setup, and then look onwards and look afterwards. Fantastic. Checklist before the trade, then a review of the image after. Fantastic. Yeah. So many people with trading logs and the emotional side at the end, they let the trade result influence their logs, right? If it ended up being a loss, you're going to see a negative tone in their emotional, how they discussed about the trade. Oh, maybe I shouldn't have traded it, when they 100% should have traded it. It was their setup. So we've always got to give enough data before the trade ends up, because otherwise we're just going to be sitting there like, you're just going to base every decision you ever make in trading, whether it wins or whether it doesn't, and it's not going to get you anywhere. Let's jump into the chart, shall we? Wherever you're on TradingView, the icons are a little bit bigger, which is sorry, but it has to be done so I can see your chats up the top. Okay. TradingView here. I'm sitting on Great British Pound Japanese Yen because I was having a look at it. What I wanted to do is, okay, there's a couple things. First of all, we were looking at all the inflation rates of the economic calendar today. Not today, but this week. We had a lot of different data come out. We had the RBA cash rate, which was hiked by 25 basis points. A little bit more aggressive than what I was expecting. That's fine. I'm happy with that. I think inflation needs to be battled sooner rather than later. New Zealand dollar didn't change on unemployment, so nothing too big there. The ADP, non-farm employment change, is actually down, which is going to be interesting to see what the NFP data is tonight, whether that's going to follow suit or whether that's going to move. We all know that the US dollar hikes their interest rate as forecasted by my Forex Factory. And then the pounds, once again, hiked it as well. The pounds and the US dollar, I think I said last week or maybe Monday in the Discord, that was guaranteed, right? They're hiking rates. That right there was guaranteed. The only one that was unsure was the Aussie dollar. The Aussie dollar they were unsure whether or not they were going to hike rates. It was expected for them to hike rates, but they weren't being very clear in their speeches about whether they're going to hike rates. They have hinted at hiking them another 5 times, so keep an eye on that in the future. And they want to bring inflation. Inflation right now is sitting at 5.6, I think it is, maybe 5.1, and they want to bring inflation down to 3% by 2024, by mid 2024. And their forecasts are including future interest rate hikes. Okay, so keep an eye on that. We are probably going to see more interest rate hikes come through on the Aussie dollar. Probably followed suit with the US dollar and the pounds. We'll keep an eye on it and see how that pulls through. The only piece of data I traded this week was the trade balance yesterday. I did have strong biases on some of the early stuff. Retail sales, I was actually looking to go short on retail sales. Even the market forecasted a big drop, but it still dropped, but nowhere near as big as what everyone kind of forecasted. That was a shock announcement. Other than that, I did have my little setup. I was looking at the PPI for Europe, and I had a long bias on that. Where are we? Here. I was looking to go long here as well, but I didn't trade it. Why? I can't tell you. It was forecasted for a large amount of growth, from 1% up to 4.9. It actually beat that and went up to 5.3, which is pretty good, not bad. And we actually got lower employment as well. That's fundamentally. I'll talk you through the Aussie dollar trade balance trade because it actually coincided with the day trade I was in. And the reason was I was looking to get in the market prior to this going out, and I saw some value. So let's have a look in that now. Okay, this was yesterday. Yesterday morning for me, probably last night for most of you. I'll touch on that in a second, Joel. This is Aussie dollar to US dollar, and this is what I was talking about. This is yesterday, okay? This is what I was talking about earlier when I first started the stream. Is a week like this, you look at this. This is on the 1 minute chart, okay? You look at this and you kind of look and you're like, that is just mess. typical Asian session, right? It just kind of went nowhere, did nothing. Standard. And we got out of the Asian session. Oh, look at that. We're kind of moving now. Same as the day before. It's kind of just like, really didn't go nowhere. Get out of the Asian session. Oh, bang, we're moving. This right there for me is exactly what I love to see. Okay, when I'm trading the Asian session, day trading on the 1 minute chart, this type of market is just banging for me, because I said we have those impulse moves where we move like 20, 30 pips, but it doesn't have enough volatility to maintain it. Okay, so we get these big impulsive moves, but it just doesn't have the volume to maintain those moves. That right there is so powerful for me. And that is what I really, really like seeing. So what I'm going to do is head back on my MetaTrader 5 platform. I'm going to get back to the times where I traded, and I can show you these, okay? So our first trade was in this drop down here. And the reason I got in this drop down, the reason I got in this drop down here, at any point, if you guys have any questions or anything like that, please just send them. Okay, I'll answer them. If they're off topic, I'll just answer them once I've completed the topic. So if anyone has any questions, send them through. The reason I got in here, the exact price, I'm going to have to say, it's about this, okay? It was something like this, my trade. The exact price I got in, let's bring this down here. $0.2450, so almost exactly where I did there, and yeah, just got to change that to a 0. That is right there where we bought. Now, why did I buy here? Can anyone at all give me some kind of indication that why I bought here? Does anyone know why I bought here? Anything at all? Online Herzl says this is nice. Oh, thank you, mate. Appreciate you being here. What I'm going to do is draw a vertical line right there as well. Remember at the start of the day, or just before, I said I had a bias for the Aussie dollar trade balance to be strong. Okay, I had a bias that this Aussie dollar trade balance, which is, let's go ahead and find it, yesterday, 9.31 billion over 7.44 billion. I had a bias that this data was going to be strong. Why did I have a bias about that? Because the manufacturing PMI was strong. Okay, manufacturing is doing really well. The exports, the imports, that the whole report was looking good. There's a good chance trade balance is going to follow suit. Okay. Now, I bought here. Now, Joel, you've gone with bottom of the range. Technically, sort of. Okay, but this range, where would this range have been? You know what I mean? Like this was before it all formed. Remember, we're just here. What I did see was an impulsive move, a big impulsive move, okay, on the open of all the stock markets, okay, the Aussie dollar stock market. This big impulsive move. Now, my whole bias for the Aussie dollar was bullish. So I wanted to get into a position prior to the trade balance data coming out. This right here is about an hour and 10 minutes prior to that data being released. And then we had this strong bearish drop. Now, as I discussed, the Asian session, I love to fade. I love to fade big moves because usually it doesn't have the volatility to maintain. It has the volatility to produce, but it doesn't have the volatility to maintain. You get a strong move and then it will just pull back, almost back to where it started, right? And you can see that firsthand. Bang, big move, pull back. Bang, big move. Even that one, big move, pull back. Move, pull back. Like it's pretty consistent in the Asian session. Okay, I love to fade these things. When we had this pullback move, after already kind of breaking the high there, the high of the day, it told me that this may be value pricing. If I've got a bullish bias anyway, this right here may be value pricing. We had a strong move. I'm going to look to fade it anyway. I want to get into a buy position prior to the trade balance coming out. Let's see if we can do that, okay? So I bought here with a very small lot. I think it was about 0.2 lots or something like that, okay? Quite small with a 20 pip stop. I had a 20 pip stop. So where's the stop? Let's go 20 pips. Now, what I did have as well was another buy order 10 pips away from my entry point, which should be somewhere around here. Something like this for the rest of my position. Okay. The rest of my position, I wanted to fill down at that price if it could get down there. So I got into the start of the position. I started building it, scaling in. I was in a spot. I was like, okay, I'm happy with this trade technically, never mind fundamentally. I was in the trade technically. The fundamentals was a little bit a while away. We had about an hour before the fundamentals come out. I set my second order, got close, but we didn't get filled, unfortunately. It got close, didn't get filled. Then we started to see this move, and this move, I'm going to see if I can produce that video that I recorded while I was trading this live, because what I discussed is the trade balance was going to be pretty predictable. Okay, even the forecast was quite high. The PMI report was really strong. It was pretty predictable, so I was saying I'm not going to be surprised if we get a pre-market mover, and then when the trade balance data comes out, there's a lot of profit taking happening. Okay, a lot of people taking the profits once the data is. So I wouldn't be surprised if we get a pre-market move and then profit taking happen. Exactly what happened, right? We moved up at about this price here. I took some profits off. Let's see if I can show you here. Let's get our MetaTrader 5 tab up here. Okay. As you can see here, this is my entry point. Same part of the chart. Okay, my entry point. I took half off just up here. So just before this red candle right here, I took half off right there. Okay, and once I took half the position off, I pulled the stop into break even. That position was no longer valid. So I was completely risk free. And this black line right here was literally, that was our trade balance report data release. Okay. Big Bang Theory, thank you for the 100 coins, mate. I will, sure, 100%. I'll do that for you in just a moment. No problem at all. The 11:30 mark right here was our trade balance report, which I was expecting positive data. Okay, so I was risk-free in a trade, half a position moving forward, prior to even having to worry about getting into the trade, right? Which was just fantastic to see. Once the data did come out, the building approvals came out earlier, about a minute earlier, which forced this downward candle here. A lot of people selling off on that data, but I don't really care about the building appraisals. While it can be a key indication into a lot of markets in terms of moving the money and moving the currency, not really. And then we had the trade balance data come out, which pushed us up. And now, when we got up to these highs, I was a little bit worried, given this area, on whether or not it's going to have the strength to get through. And as you can see, I took off another half of the position right at the top here. Okay, I hope you guys can see these arrows here. I took off another half of the position here and brought my stop to where I took off the rest of that position. It come down and stopped me out about there. Okay, that right there was my trade. That was it. That was my trade balance trade. I got in early because I saw opportunity and value positioning. I scaled in, tried to scale in, but it didn't hit my second spot. And then we pushed all the way back up. The trade balance was positive, but I was expecting a bit of profit taking to come through. That happened. Then at 11:45, we had some Chinese data come out, which I'm going to talk about the correlation between the Chinese and the Aussie dollar datas. And then the rest of the day was kind of like, okay, we're going to start fluctuating towards the downside. Then the US market took over, and see you later. Okay. That right there was a bit of a trade review for you guys, a little day trade that I had yesterday. I hope that was clear. I hope that made sense, and I hope some of you valued that as well. I don't usually share my exact trades and my analysis or my thought process through there, so there's a little treat for you. Big Bang Theory, you want to have a look at the 1 month time frame on Euro US dollar. You want to know whether or not the Euro is going to be stronger. It's interesting, isn't it? Because we're at the dollar mark, monthly time frame. Where are we? We are at the dollar, we're at the almost flat ratio. And there's so much talk about whether or not we're going to see a different quote currency. US dollar is kind of a global quote currency at the moment. Yeah, is that going to change? Are we going to start moving towards gold? Are we going to go to a new currency? What's the innovation crypto is getting really big. Are these countries going to start, introducing some kind of, who knows? Everything changes sometimes, right? Are we approaching a stage of innovation? Are we approaching a new era, so to speak? Maybe. Where's my conspiracy theorist at? Now, your question is, will it hold? That's a tough question. You know why? Big Bang Theory. The reason why I'm going to say it's a tough question is because I don't believe the technical aspect is going to have a say on that. Okay? Whether or not this holds, we can have a look at and we can review technically. Oh, yeah, it's bounced a few times. We've also, as you've drawn there, we've also got this area up here. We're kind of sitting in this channel. It could, right? It could hold. We could bounce around. We could get up here. We could come down here. Definitely viable. If you're looking this long term, if you're looking at the trading the monthly chart and whether or not it can hold this area, exactly right. ECB rate hike in June, I definitely think you should be looking at fundamentals. Trading this long term, 100%. Look at value cases, right? Have a look. Euro's been absolutely dumped. Why? Well, there's a war in Europe at the moment, okay? That kind of has something to say. That can still get bigger yet. And as time goes on, it's looking like that war might get a little bit bigger. That right there is going to have a big effect on the euro's value. And that is why it's getting dumped heavy right now. Plus, we've got mass inflation. We've got just coming out of COVID. There's not a whole lot of positive sights at the moment looking at global economics. But the question is, which is going to hold strong? Is the US dollar really going to hold strong and maintain its top of the range, king of currencies status? Or is it time it's going to change? Is it time where the US dollar is not going to be as strong as what it once was, given the extremely higher inflation they've got at the moment? I think that topped at 8.6, was it? Or has it gone further now? I'm not sure. Is anyone here from the US? Can anyone give me an indication on what your inflation's like or anything from the inside there? I haven't really seen much of a difference in inflation here in Australia. We're up to 5.1, but nothing too crazy. However, we are actually expected to get up to like 10%, which is probably going to make a bit of a difference, especially if you're on a business side of things and buying materials. A lot of big companies out there are now starting to look at how they can hedge inflation, and a lot of people are as well looking at how they can hedge inflation. A lot of people flooding into the stock market and stuff like that, but that's a story for another day. Big Bang Theory, technically, we're in a channel. Okay. Now, this channel has been tested many times before. 1, 2, 3, 4. This is the 5th test. How many times can a channel really hold? Okay. How many times can a channel like that really hold? It's getting weaker and weaker every time it touches. I think people are kind of just want to get it down just because why not? I definitely don't want to buy any euro right now. I don't want to invest in the euro with a war on the doorstep. They've just said they're going to cut off gas from Russia, which is like their main gas supplier. There's a lot of things that say I'm not too hot in buying into the euro, and I'm not sure. Tough call. Sorry, that's not much help, but I don't want to buy the euro. That's just the sentiment thing, right? Looking fundamentally, looking how it's performed, mostly down to the war is the reason I don't want to buy the euro. But if you're looking to trade this on the monthly, I'm going to need some pretty big indication that this is going to go higher. Like, I'm going to need something, because these candles right here just yell everyone flooding out of the euro, and in turn people heading to the dollar. But even then, like, Japanese yen's probably not the best one to have a look at. Even then, is the US dollar that strong? Who knows? Who knows? We'll touch on US dollar CAD soon. I won't remove those. Yeah, it's a tough one. Online says, please, how do I access to the 5%ers funding? You just go through our website. You head to our website, you'll see all our different evaluation programs. We've got 3 different evaluation, actually probably more because they've got subcategories within those evaluations. Choose which one suits your trading. We've got the freestyle, which is essentially you can do what you want as long as you show you're profitable. Good on you. We've got the boot camp, which is really low sign-up fee, and you only pay the rest of it when you actually get funded, once you pass the stages. And then we've got the instant funding where you go straight on to real funds, which is my personal favorite. I like the instant funding programs. It's the ones I passed and start trading and still trade to the day. But we've got all those programs for you to run in if you want to have a look at them. They're just on our website, 5%ers.com. Okay, or is it the 5ers.com? You can send a Google or go through our YouTube here. It's important to know we are near an important support, correct? You think the support will break? Yeah, maybe. The support may break. I'm not overly confident. I don't know why I'm sitting here on New Zealand dollar, US dollar. We're talking about the euro. It's been tested 5 times. How many times how much demand is there around that price? The thing is that $1 right there, like we haven't hit it. We haven't hit, where is it? Down here. We haven't hit the $1 yet. So we might get a fake out. We might break out, hit the $1 and then shunt. Because that $1, I guarantee there's going to be so many people just waiting to buy on that $1. Or short, but there's going to be so much volume traded around that 1. Okay, that level of 100%. Strong close down in support, but you never know. Yeah, exactly. It is a strong close down in support, but we had that before. We've had that here. We had this candle right here. We've closed down in support strongly before. We've closed up into the supply quite strongly. So yeah, that one that right down here is going to be that level to watch, in my opinion. Right there. That's going to be an interesting level. Which currency is in correlation with the euro US dollar? I'm new to Forex. In what terms? No worries. What do you mean? What do you mean by in correlation? What are you trying to do? Essentially, is what I'm asking. Add to that, it's the 5th time. Exactly. Yeah, it's tested this area a lot. What are we looking like on the daily here? If it wasn't the euro, I'm looking kind of like a short-term long here. Like when I say short-term, I mean really short-term. But it's the euro. I just don't want to buy the euro. I don't want in. I don't want to trade it. I don't want to be part of it. I'll scalp it. I'll trade it through the day. Sure, I'll do that. But I don't want to. I don't want to trade it. Okay. There you go. There's your Euro US dollar analysis. We had a look through my Aussie dollar US dollar trades. Does anyone have any questions before we proceed? I want to run through US dollar CAD because it was our chart of the week. Flash has come through and said Euro US dollar Swiss franc. Okay. Other currencies, for example, always do the opposite or something. Well, Flash believes it's US dollar Swiss franc. I try not to look for it. I don't think they correlate hand in hand the way that you kind of want them to. There's definitely bigger correlations. Like the US dollar is very strong in terms of being a quote currency, right? Of being like the base, the biggest currency out there, right? So when the US dollar moves, it moves most charts the same way because it's the US dollar. While you might find correlations, they're only going to be correlated because they're quoting normally against the same currency. Like you can have a look like the Aussie dollar and the New Zealand dollar, they kind of go hand in hand. The CAD and the US dollar, they sometimes replicate each other, okay? but I wouldn't base any like decisions off of that. If you were trading a currency, like let's say you wanted to buy US dollar, okay, and then you're going to look for buy setups on the US dollar. Have a look at everything is paired against, find one that's weak, and then look for the setup on that. In terms of like trying to find correlating pairs to hedge, I'm assuming that's what you want to do. You want to find weakness somewhere and hedge it both ways. Can be doable. Personally, not something I would like to do or recommend doing. But because like essentially you're just doubling down on the same analysis. I think inversing the chart always gives a clear perspective of what may happen. Yeah, Mick, not wrong, not wrong. If you sometimes if you're like a bearish minded, you prefer to go short than long. Flipping that and removing that bias can help. 100%, 100%. But I base most of my trades from a fundamental aspect. Okay, so I have a look at what currencies do I actually want to buy at the moment, what data do they have coming out through the week. Is it strong? Is it weak? And then I'll go in and have a look at the technical side of things and be like, okay, I'm looking for buy opportunities on the US dollar. It's really weak against the Japanese yen. US dollar, Japanese yen. What opportunities do you have for me? Digging down like that. So I guess it just depends on how everyone trades. Everyone's a bit different on how they do their analysis. Okay, let's have a look at US dollar CAD. US dollar CAD was our chart of the week chart this week, and I did my analysis on the 4-hour chart. Why? Because I'm an idiot. We put it out as a 1 hour. I did it on a 4-hour. Analysis was pretty clear. Okay, I wanted to break up, pull back, follow on. We got to break up, shunt down to this demand area, which I had drawn out, and then it bounced off from that. Okay. The interesting thing with this is we put this chart forward, and the moment I saw it was this chart, I was like, oof, this is going to be tough, because I was bullish for both the US dollar and the Canadian dollar. Okay. So I kind of had to find a medium of which one was I more bullish for? Which one did I believe would do better than the other, given I was bullish for both? I picked the US dollar. I thought the US dollar would be stronger. Turns out the CAD was a little bit stronger over the past week. Okay, but that's fine. It happens. Spoke about the interest rate hikes that were coming up. US dollar, we had good retail sales data. The CPI data we had coming through was positive. We already raised interest rates. The Bank of Canada did, signaling more, which is usually a good sign they're going to battle the inflation the right way. Strong jobs data. It correlated quite nicely. I wanted to see a bullish dollar. US dollar didn't come through. We did get a little bit of a bullish push, a liquidity grab, and then a push down here into what I actually like to call I probably can't say that. What I like to call it is something that's probably not appropriate to say. But it's where we literally have no idea. Okay, we broke a higher high, we broke a lower low. So we broke a lower low, we broke a higher high, we broke a lower low. We're coming back up. We might break a higher high, and it's like when we get a triangle that goes like this. And when we have something like this, it usually indicates to me that I should stay far away from this chart, because there's no clear direction, there's no clear understanding or value proposition. Everyone is thinking that the median price should be right there, and that is where that price is going to stay. Because you get a couple of bulls that go, yeah, we'll push it higher, and then they go, nah, not that high. And it comes down, yeah, we'll push it lower, and they go, oh, nah, not that low. And it all just kind of fluctuates into the middle until we get some kind of change in policy, some kind of big fundamental news which is going to affect the market a lot more war, more spending, whatever it might be. Then we'll break out of this and it'll be like, okay, we've all got a bias now. Let's start heading this way, and it'll probably create a new trend. But in the time being, when we're getting a lower high, a higher high, a lower low, a higher high, a lower low, I'm staying far away from that chart. I don't want to be in that. We are sitting at a clear bit of range here. It actually kind of correlates back there as well. But yeah, it'll be interesting. It'll be interesting to see what it can do, where we can go from here. Anyone have any analysis on that? Anyone got an opinion on where they think this is going to go? What are order blocks, zones of demand, or something different? Okay, you're asking some big questions there, and I don't have all day to answer those. If you go on the 5%ers website, we have a little trading course done by Saul, and he talks a lot about supply and demand zones and order blocks and stuff there. That right there might be more inclined to what you want to read about, because it's going to take me hours to go through what all those things could be, and I've got about 8 minutes left of stream. So yeah, unfortunately, I'm not going to be able to run you through all of those, but definitely do some research about understanding supply and demand. I think any type of trading, whether you're doing cryptocurrencies, whether you're doing equities, forex, whatever it might be, understanding supply and demand is detrimental. Like, you need to understand supply and demand, because that's what moves the market every single time. The only reason this chart right here went up like that is because there was more demand than supply. Okay. The only reason this chart came down was because there was more supply than demand. It's very simple. Same with inflation, right? The only reason we get inflation is because people have more money and there's more demand for the products than what there is supply. So the suppliers start charging more, or the bidding wars start coming out. And look, the Australian housing market at the moment has gone absolutely through the roof. Why? Because there's heaps of demand. There's heaps of people coming over and wanting to buy these properties. And there's nowhere near enough supply in the areas where people want to live. And woof, housing market's gone through the roof, right? Too much demand. So much demand, not enough supply. It all correlates. Can you explain why the dollar would go down after the FOMC, after increasing rates? Or was it just priced in already? Yes. Okay. Carlos, great question. This is actually something I wanted to touch on. You just reminded me. Here we go. Why we had positive news come out of the interest rate decision, right, with the US dollar. Why did the price go down? And this is something I touched on. When did I touch on? I can't remember. Was it last week? It might have been last week I discussed it. No. I put it in the Discord chat, maybe? I think I was talking about it in Discord chat. And what I said to all the traders was, do not trade the interest rate decision itself, okay? Because the interest rate decision is highly predictable. Unless there's a mad shock announcement and they didn't hike rates or they lowered rates, did something ridiculous, no one's trading that interest rate data. There's going to be robots that buy and sell based off of it, but no one's trading that interest rate data, right? It's already been priced into the market, as you say, Carlos. It's already been priced in, okay? Because everyone knows what that's going to be. They know what the right thing to do is. The reason you saw a difference in what you expect to happen would have been partial profit taking, okay? But when we have these interest rate decisions, it's the policy meeting and the press conference following on from those decisions that actually move the market. Because we know what the interest rate decision is going to be. At least we have an area, and people bought into the currency 2 weeks ago knowing that was going to be the case, right? And we would have had moves that way. But what they don't know is what the future holds. And these meetings and these press conferences prior to hiking rates or whatever it might be, they give indication on what their forecast is for the future. The same way the RBA, the Australian Bank, Reserve Bank of Australia, came out and they said, our forecast is to get inflation down to 3% by 2024, which gave everyone the indication that, holy, okay, they're going to have to hike rates a lot more to get us that low by 2024. These are the things that move the market, not so much the interest rate decision itself, because that's already priced in. Okay, most people will understand what that is going to be. They know it. There's no point trying to trade that. What they are trading is the meeting minutes, like the report, the press conferences, the indication, the clues that we can grab moving into the future. Where are we heading next? What is their next decision? Are they, in a hawkish tone? Are they in a dovish tone? What are they trying to, say without saying it? And it's our job to pick that and then base decisions based off of that. That is why it probably didn't go the way you thought it would. And it's the same for every interest rate decision. Highly recommend not trading interest rate decisions because it's not based off of the interest rate itself. It's based off of what the future interest rate could be. Any views on NFP you want to share? Not really. We had negative ADP non-farm employment data earlier in the week. I'm not sure. I'm really not sure. I don't like trading NFP because it's probably the most lucrative market mover compared to all the other data. So I tend to stay away from it personally. I don't like to go in with a bias. I just don't trade it at all. Ruben had a thorough discussion on US dollar CAD on the Monday live stream. Talked about the correlation with oil. Fantastic. That's awesome. I have to watch that. I haven't watched this live stream this week, but I'll reach out to Ruben and get a copy of that and have a look through it. He's a very smart guy, and I like the way he discusses his correlation as well. Really good, really good. No worries. Yeah, so majority data, exclude NFP for a moment. Majority of the data you have a look at and you're going to want to be trading, you'll see that you'll have like retail sales. Okay, retail sales for the Aussie dollar, pretty good. If you look at the services PMI, if they've done well in the service sector, there's probably a good chance retail sales are going to be up. Trade balance, you can look at the manufacturing PMI. Employment, you can look at everything. PPI, you can have a look at the CPI, right? If the consumers are paying more, there's a good chance that the producers are paying spending. What's the word I'm looking for? If the consumers are paying more, there's a good chance that producers are charging more. That's what I'm looking for, charging more. So a lot of the data is correlated in that sense. NFP I don't like just because it's crazy. Interest rates, I don't recommend trading with a bias. Other data, if you can generate a bias and it can be a good bias, then do what I did. I got into a trade early. I managed to get risk-free. Element of I don't want to say luck, but an element of we'll go with luck. Element of luck to get risk-free prior to that coming out, but we can get bias, we can get ideas, trade ideas based on all this fundamental data that we get, because in reality that's what moves the market. What have you sent me here? You got the shorts, dump it, FOMO long support. What are you looking at? US dollar CAD? Interesting, yeah. Okay. So you're a long-term trader then, Big Bang Theory. You like the long-term charts. That's what I'm noticing anyway. Tell me if I'm wrong. Ooh. All right. Does anyone have any questions at all? Fire away. Now's your opportunity. Next week, okay, this time next week, I believe I'm going to have a special guest with me. First time ever. Debut, right? Special guest. And that's Trader John. And Trader John, we're going to figure out whether it is going to be next week or not. He's an algorithmic trader. He's going to come through and he's going to talk about how he does it, how he does his EAs, how he codes them, the decisions he makes based off of them, and then the trading results from coding them as well, which is a completely different aspect of the way I trade. So it's going to be interesting to see that. I'm going to ask as many questions as possible and pick his brain for everyone to see. So it's going to be interesting. And yeah, I hope you guys enjoy that. It's going to be something a little bit different. In the future, I do want to do some things a little bit different, a little bit more entertaining for you guys. Let's get some special speakers on. As I said, I want to formulate a way that we can trade live, but I also don't want to shoot myself in the foot, essentially, is what I'm saying. So it's going to be interesting. Yeah, that's right. I'm going to bring on a trader from a firm that is an algorithmic trader, and he's going to have a chat with us this time next week. You took a trade on US dollar CAD last Friday that just stopped me out at break even yesterday. Did get partial profits, so fantastic. Well done. No, it's good. I like taking partial take profits personally. I'm a big fan of partial take profits. No questions. Thanks for your input. No worries, Flash. I appreciate you being here and sticking around today. It's great to chat to you. I hope I haven't talked too many ears off. We do a lot of chatting here, and that's what I mean. Like we chat constantly on this live stream back and forth. But I want to start. If anyone has any ideas or some things they would like to see from this live trading room, send them 100%, because I'm an open book. It's tough for us to actually commit to some live trading when we've only got an hour. I can probably go longer in the future, but whether or not it's going to be worth, and then we battle all those things. We're in the Asian session. How much opportunity are we going to get over that hour? There's a couple of things we've got to look at in terms of that. But trader interviews I'm going to start doing, bringing on some special guests. I got some people that work in Sydney that are some like pretty high up prop firm traders, 7-figure traders. I might bring them on to have a discussion with us, and they can chat about how they go about it. And then there's a couple different competitions we might run in the future. I'm really going to start to look to innovate this and start to attract more attention. So if anyone has any ideas or something they would love to see, 100% send it over. I'm an open book. We'll run through it. I'm glad you find it cool, Joel. I really enjoy doing this, right? I really enjoy having a chat to you guys, but I find that it can get a bit repetitive. I'm not sure if you guys agree with me or not, but sometimes I feel like I'm explaining the same thing a couple times, and it would be good to when a currency goes against big moves like we just said with the US dollar and like GBP today, would you look at it at a pullback, or is it priced in so you no longer have a bias? When currency goes against big news, like we've just said, okay, would you look at it as a pullback, or is it so priced in that you no longer have a bias? Are you talking about the interest rate decisions? The interest rate decisions is not a pullback. If they come out and they're speaking in a like when they have these interest rate meetings, okay, usually it takes about 2 days to price that in. So the initial impulse might not be the right way at first, but once it's all settled down and all the interviews are done and all the data's on the table, and your analysts start reading through it and your big firms start reading through it, and they go, okay, they've hinted at doing this, 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 and this. They've removed this from their policy, which has given us a bias that they're going to act on this. Okay, for example, that's what it says. Based off of that, we're going to go ahead and we're going to short the US dollar, or we're going to buy the pound. All right, and then you'll see your big orders come through, which are those extra movements which are kind of against the way you thought it would go. Those big movements are those big firms putting a lot of money into these positions, because they're like, yeah, okay, this is what they hinted at, this is what they're going to do. And it usually can take maybe 2 to 3 days to factor in, because not all of these big firms go buy and they buy, $6 million worth of currency. They'll do it in segments. They'll do $100,000, $200,000 there, $300,000 there, another 100,000 there, and they'll kind of price it in, which creates a bit of a trend, right, to get the best value for them. They'll try to do it on the dips. But yeah, you'd usually see it will probably create a trend, and it'll probably run that way for a little bit while. So definitely wouldn't see it as a pullback based on news like that. The actual moment it released, maybe, because robots can only see numbers. They can't read tone. They can't read, unless it's an extremely good robot. But most EAs are only going to read the interest rate decision and then buy or sell based off of that. But no, especially big news like that, I wouldn't see it as a pullback. I'd see it as an indication of a trend mover, or a trend change, or a trend continuation, whatever it might be. But fundamentally, that's going to be a big push. When you see big hikes from retail sales data or things like that, then you might be able to see some value for money there. But yeah, I'll check that out soon. Big Bang Theory. I'll have a look through and see what that is on German TV. I'll have a look through. All right, guys. I think that is going to do us. I think that's it. We've gone through pretty much everything I wanted to do through. I wanted to show you that little trade I took on Aussie dollar. I did take a few more, but they were literally just fading big moves like I spoke about. I wanted to show you the analysis there and why I took it, and then how the trade balance reacted. And you see we had that prior move. We had the good data come out, and then it went down. Like, what? It was because it was a lot of profit taking. And sometimes that's predictable to do that. As always, guys, it's the last day of the week. It's Friday for me. Thursday night for some of you. Friday tomorrow. Have a good trading day. Do what you got to do. Then once you finish trading on the Friday, turn off the charts, turn off everything, go spend some time with your friends, go spend some time with your family, reset, come back on Sunday or come back on Monday with a fresh mind and kick the market's ass. All right, let's do it next week. Everyone reset, go away, go get away from the charts. It's really healthy to do so. Please actually do it. Step away for a little bit. Go spend some time with friends and family. Go have a good time. And then come back on Monday or Sunday and get ready to have a cracking week. I wish you all a fantastic and healthy weekend, and I'll see you next week, hopefully with a special guest. Special guest, boys. All right. Enjoy, guys. Thanks for your time. Till next time.